So what we want to have in the portfolio is a mix of styles. We have the long-term growth via US equities. In Europe, we added to large caps. But this is not to say that other markets that are more cyclical in nature cannot do well. We also have an exposure which is global small caps. Smaller capitalization stocks typically are weighted towards the US, but there's some Europe there as well. So we want a mix, and it is, I suppose I would describe it as we have added to cyclicality on the economic improvement that we see in the Eurozone, but via large caps as opposed to other types of markets.
Does that feel as though it may be underwhelming, though? Do you have a sort of what if in your mind if we see another outperformance from US technology names, which we know can far eclipse some of the cyclical trades we've seen in Europe?
I think it's all in the mix, really. Of course, US equities are a compelling asset class from a medium to long-term perspective. They capture these long-term innovation trends. The question whether we have enough at this stage, and we think we do. The question whether valuations, I wouldn't describe them as frothy, by the way, but yes, they are more demanding, all else equal, than Europe. And since Europe is a more under-owned, unloved market, that's where we added a little bit.
It's one of the things you hear a lot, Daniela, is how Europe is undervalued and is the place that you perhaps should go to for some value as well because it's under-owned, as you make note of as well. But that doesn't always seem to come to the fore. Now you also have more deals coming to the table. The economic situation is improving. Does it begin to garner more favor, do you think, or will it always be the sort of laggard in respect of growth?
I don't think Europe will lag. That is the idea. I don't see why it should lag global equities, as an example. We have the cycle that is turning. I think there's room to surprise to the upside. Also, earnings look better, and valuations, I wouldn't describe them as really low. I don't think Europe is undervalued per se, but valuations more average and not demanding compared to other developed markets. That's the idea, and so that's why we shifted from bonds to equities in that region.